Listen closely, because what I am about to tell you is the sound of a financial heart attack happening in real time. For decades, you have been told that China is the apex predator of the global economy, a strategic mastermind playing a 100-year game while the West struggles to figure out what to tweet tomorrow morning. But on October 2025, the mask did not just slip, it shattered. Imagine a country that starts the year by slamming the door shut. On January 1, 2025, Beijing placed silver under state trading export controls. They told the world, "This is our silver. Our solar panels need it. Our electric vehicles need it. You cannot have it." The world panicked. Prices climbed. Industrialists looked at their supply chains and saw a graveyard. But then came October. In a move that smells like pure, unadulterated desperation, Beijing did the unthinkable. They did not just open the door, they ripped it off the hinges and threw 660 tons of silver straight into the mouth of the London market. 660 tons! To put that in perspective, that is more than double their 5-year monthly average. It was the largest single-month export volume in recorded history. Now ask yourself, why would a strategic superpower reverse a major national security policy in just 9 months? Why would they flood the very market they were trying to starve? The answer is not a change of heart. It is a house on fire. China was not acting out of strength. They were acting as the lender of last resort for a system that was seizing up. And here's the kicker. The part that should make your skin crawl if you hold any paper currency. China dumped $37 billion worth of physical silver into the market in 30 days, and the price did not go down. It didn't even flinch. By December 18, 2025, silver hit $66.21 per ounce, an all-time record high. When you flood the market with a record-breaking supply and the price goes up instead of down, you are no longer looking at a market. You are looking at a mathematical death spiral. The illusion of control is gone. The era of cheap silver is dead. And today, I am going to show you exactly how many days are left before the vault doors at the Shanghai Futures Exchange hit zero. Let us pull back the curtain on what actually happened inside the smoke-filled rooms of Beijing and London during that chaotic October of 2025. To the average retail investor watching the news, it looked like a policy shift. To the pros, it looked like a bloody crime scene. Remember the timeline. January 1, 2025, the Chinese Ministry of Commerce declares silver a strategic resource. They treated it like rare earth metals. You want it, you ask for permission, and usually the answer is no. This was supposed to be the ultimate flex of Chinese industrial dominance. They produce over 80% of the world's solar panels. Each panel eats about 20 grams of silver paste. With China installing record-breaking solar capacity in 2025, they were supposed to be the ultimate hoarders. But by October, something broke in the plumbing of global finance. The London Bullion Association, the beating heart of Western precious metals trading, was experiencing a physical squeeze so violent it threatened to destroy the global pricing mechanism. Physical silver inventories in London were bone dry. Buyers were paying massive premiums just to get their hands on actual metal instead of a piece of paper that says silver. The London market was screaming, and when London screams, the world listens. Because if the London price breaks, the entire global derivatives market, worth trillions, collapses. So what did China do? They performed an emergency transfusion. They exported 660 tons in 30 days. That's over 21 million ounces. Think about the sheer logistics of moving 21 million ounces of silver in 4 weeks. This was not a calculated trade. This was an emergency intervention. According to industry analyst Zi Wu, this crisis stemmed from a lethal combination of rising exports to London and a domestic demand that refused to cool down. Here's where the sarcasm kicks in for the so-called experts. Earlier in 2025, Shanghai silver was already trading at a 15% premium over Western prices. In a rational world, you buy low and sell high. Chinese traders should have been importing silver from London to make a profit. Instead, they were exporting it. They were sending silver from a high-priced zone to a low-priced zone. Why? Because the system was breaking. This 660-ton dump was an attempt to plug a hole in a sinking ship, but the hole was too big. Usually, when you dump a record amount of any commodity, the price crashes. If you dump 660 tons of silver, you expect the market to tank, but the market did the opposite. It swallowed those 21 million ounces and asked for more. By December 26th, spot silver was trading above $52. By mid-December, it shattered the ceiling at $66.21 per ounce, an all-time record high. When you flood the market with a record-breaking supply and the price goes up instead of down, you are no longer looking at a market. You are looking at a mathematical death spiral. The illusion of control is gone. The era of cheap silver is dead. And today, I am going to show you exactly how many days are left before the vault doors at the Shanghai Futures Exchange hit zero. If you want to understand the future, you have to look at the scars of the past. Beijing has a favorite game. It is called the strategic chokehold. And if you think what is happening with silver is a random accident of the market, you have not been paying attention to the history books. Let us travel back to the year 2010. At that time, China controlled 97% of the global production of rare earth elements. These are the minerals that make your smartphone vibrate, your electric vehicle run, and your cruise missiles find their targets. Beijing decided to use this dominance as a geopolitical hammer. They slashed export quotas by 40%, and the world went into a collective seizure. The result? Prices for materials like dysprosium and terbium did not just go up, they went vertical, increasing by hundreds of percent in a matter of months. The West scrambled, manufacturers panicked, and Beijing sat back and watched the chaos they created. Fast forward to January 2025, and China tried to run the exact same play with silver. They slapped on the export licenses, they tightened the screws, they wanted to show the world who owns the green energy revolution. But here's the dark comedy of the situation. There is one massive fatal difference between 2010 and 2025. In 2010, China actually had the goods. They had the mines and they had the stockpiles. They were the king of the mountain. In 2025, they're playing the same game, but their pockets are empty. You see, you can only play the bully if you have the lunch money to back it up. China produces about 3,300 metric tons of silver annually. That makes them the third largest producer on the planet. Sounds impressive, right? Until you look at the consumption side of the ledger. China consumes 19,000 tons of silver every single year. That's a 15,700-ton deficit. Let that sink in. They consume nearly 6 times what they produce. For years, they filled that massive hole by importing from the West and draining their own massive internal stockpiles. They were the swing supplier of the world because they had the biggest vault. But the October emergency dump of 660 tons proved the bluff is over. You cannot policy your way out of geology, and you cannot lie your way out of a deficit this large. When they restricted exports in January, they thought they were being strategic. By October, they realized they were just starving their own global customers and risking a total collapse of the London pricing system that they still depend on. The lesson from the rare earth crisis of 2010 was that the world will eventually find a workaround or a new supplier. But silver is not a rare earth. It is a fundamental element of physics. It has the highest electrical conductivity of any metal on the periodic table. There is no workaround. There is no substitute that doesn't kill efficiency. China tried to use silver as a weapon, but they forgot one thing. They are more addicted to silver than the people they're trying to threaten, and now the needle is running dry. Now let's get into the cold hard numbers that keep central bankers sweating through their expensive suits at night. We're moving past the headlines and into the mathematics of a vanishing asset. If you think I'm being dramatic, just look at the data from the Shanghai Futures Exchange. In January 2021, the visible silver inventories in Shanghai sat at 3,911 tons. That was the high watermark, the Great Wall of silver. But by December 11, 2025, those vaults had been gutted. The inventory crashed to just 780 tons. That's a 75% wipeout in less than 5 years. Let's do the math that the mainstream media refuses to put on a teleprompter. China consumes 19,000 tons of silver a year. That breaks down to roughly 1,583 tons every single month. Their current visible stockpile is 780 tons. If you divide that by their monthly consumption, you get 14.8 days. 2 weeks, that's it. China is running its entire industrial superpower economy on 2 weeks of visible silver inventory. Imagine a country that produces 80% of the world's solar panels and a massive chunk of the world's electronics, and they're 14 days away from a dry warehouse. The critics will tell you that China has hidden reserves, strategic stockpiles in state warehouses that we can't see, and they're probably right. But use your brain for a second. If China had plenty of silver in the basement, why would they allow their visible exchange inventories to collapse by 75%? Why would they flip-flop on export policies in a 9-month span? You don't panic sell 660 tons in a single month if your cupboards are full. The reality is that the industrial machine has become a monster that cannot be fed. The solar industry is the primary culprit. In 2024, the global silver deficit was 215.3 million ounces. That was the second largest deficit in 20 years, and in 2025, the solar boom expanded by another 20%. Every new gigawatt of solar capacity is like a vacuum cleaner sucking silver out of the earth. Then you add the electric vehicle transition. Each EV uses double the silver of an internal combustion engine. Then you add the AI infrastructure build-out. Data centers are packed with high-end electrical contacts, and silver is the only metal that can handle the heat and the conductivity required for high-speed processing. We are witnessing the industrialization of silver. It is no longer just a precious metal for jewelry or coins. It is the fuel of the future. But unlike oil, you can't just drill a new hole and find a massive pool of silver. Silver is mostly a byproduct of mining for copper, lead, and zinc. If you want more silver, you have to mine more copper. But the copper mines are already struggling. The math leads to one inevitable conclusion: extinction of supply at current prices. The 660-ton dump in October was not a sign of abundance, it was the last gasp of a dying reserve. When the visible inventory hits zero, the paper markets in London and New York will realize they're trading claims on a metal that doesn't exist. That's when the real chaos begins. While you were busy watching the dumpster fire in the Chinese silver vaults, another giant was quietly emptying the shelves of the world. Enter India. If China is the world's factory, India is the world's silver vacuum cleaner. And in late 2025, the numbers coming out of the Indian subcontinent are not just high, they are a direct threat to the existence of the Western financial system. According to recent trade data, India's trade deficit surged to over $21 billion in October 2025. Why? Because they went on a bullion buying spree that shocked the global markets. In October alone, silver imports jumped by over 500% compared to the previous year, reaching $2.7 billion. In just 2 months, September and October, India sucked in over 2,600 tons of silver. Let us do some quick math for the skeptics. 2,600 tons in 60 days. That is nearly 10% of the entire world's annual mine production gone in 2 months to a single country. Where did this silver come from? It came from London, it came from Switzerland, and it came from Hong Kong. But here is the dark comedy of the global supply chain. Much of that silver hitting Indian shores was actually leased Chinese silver. Beijing was not just selling their metal, they were lending it out through complex financial plumbing to keep the London bullion market from seizing up. China exports to London. London routes it to India to satisfy a hunger that cannot be stopped. It is a game of musical chairs where the chairs are made of silver and they are disappearing one by one. The Indian consumer is not like the Western retail investor. They do not trust paper. They do not trust the rupee. They trust what they can hold. As silver prices hit record highs of over 200,000 rupees per kilogram on the multi-commodity exchange in December 2025, the demand did not slow down. It accelerated. Why? Because the Indian industrial sector is in a full-scale solar and electric vehicle boom. Each electric vehicle requires between 25 to 50 grams of silver. With India's economy growing at 8 to 10%, they are no longer just buying silver for weddings, they are buying it to power their future. This is the definition of a death spiral. Stage 1. China imports heavily to feed its solar machine. Stage 2. Domestic solar production consumes the stockpiles faster than they can be replaced. Stage 3. Inventory collapses. Stage 4. India enters the market with a 500% increase in demand. Stage 5. The world realizes there is not enough physical metal to satisfy both giants at once. We are currently in Stage 5. The premiums on physical silver in India are trading at massive levels above the official rates. Delivery delays are stretching into weeks. When you see the world's largest silver consumer, India, and the world's largest producer and consumer, China, fighting over the same shrinking pile of metal, the paper price in New York becomes a joke. The math is simple. The supply is finite, the demand is infinite, and the spiral is tightening. Now we come to the part where the rubber meets the road. We have looked at the panic in Beijing. We have looked at the empty vaults in Shanghai. We have seen India vacuuming up the world's supply. The question remains, where is the ceiling? If you were waiting for a rational correction, for the price to return to $20 or even $30, you are waiting for a ghost that is never coming back. As we enter early 2026, the global silver market is no longer driven by sentiment. It is driven by a structural deficit that has lasted 5 consecutive years. And in January 2026, the final fuse was lit. Beijing has officially implemented new silver export licensing frameworks. This is not a temporary ban, it is a fundamental shift toward resource sovereignty. They are telling the world, we are no longer the global refinery for your cheap electronics. If you want silver, you pay the price or you go without. This move affects over 60% of the global silver supply that traditionally flows through Chinese channels. Let us look at the timeline of the coming year. January 2026. Watch the Shanghai inventory. If it drops below 500 tons, the market will enter a state of permanent backwardation. This means the metal you can touch is worth significantly more than a promise of metal in the future. February 2026. Watch for physical delivery delays in New York and London. We are already seeing major refiners in the United States turning away high-purity silver because they simply do not have the capacity to process the demand. The second quarter of 2026, this is the breaking point. Major banks like BNP Paribas and institutions like BMO Capital are already raising their targets to $100 per ounce. Why $100? Because of the gold-to-silver ratio. Historically, in times of monetary stress, this ratio collapses. In December 2025, gold is trading near $4,000 per ounce. If the ratio reverts to its historical crisis level of 40-1, silver should be at $100. If it hits the 15-1 ratio seen in previous centuries, we are looking at over $260 per ounce. The mainstream experts will warn you about demand destruction. They will say that high prices will force solar companies to use less silver. They call it thrifting. But physics is a cruel mistress. You can only reduce the silver in a solar cell so much before the efficiency drops through the floor. You can't build a high-speed AI processor with copper. It will melt. We are moving into an era of zero inventory. The 660-ton dump was the last bullet in the gun. China has no more emergency supply to save the West. India is not stopping its buying spree, and the mining industry is stagnant because nobody has invested in new silver mines in a decade. The math doesn't care about your opinion. It doesn't care about the Federal Reserve. It only cares that there are 1.2 billion ounces of demand and only 800 million ounces of mine supply. You are looking at a 400 million ounce hole that cannot be filled. When the crowd finally realizes that the vaults are empty, when they see the price hit $80, $90, and then blow through $100, they will rush in. But by then, there will be no physical metal left to buy. The door will be locked. The October panic was your final warning. China tried to save the system, and they failed. Now the system belongs to the math, and the math says $100 is not the target, it's just the beginning.